Now, our last session today is a very important one, because when we look at the trajectory of FinTech, a lot of people ask, what's coming next? And we're going to have a look at what's happening with InsurTech. And to do so, I'm absolutely thrilled to announce our final moderator. She's the chair of Innovate Finance, as well as a trusted business advisor on tech transformation. We've really saved the best to last today. Ladies and gentlemen, the brilliant Natalie Ceeney.
I'm delighted to be hosting the final session of today's conference, and I hope we have left the best to last. And today, we're going to talk about InsurTech. So after a slow start, investment in InsurTech is growing fast. It hit record levels in 2017, with funding coming not just from VCs, but huge investment from incumbents. We've seen report after report from leading consultancies about the opportunities and threats InsurTech presents incumbents, quite reminiscent of the language we saw a few years ago about banking and fintechs. But how is InsurTech going to pan out? Is the existing model going to be thrown out or made customer-friendly? Will disruptors dislodge the incumbents, or are we going to see partnership? And with the Internet of Things and driverless cars, is there a future for standalone insurance? Well, I'm delighted to bring to the panel today two of the leading players in this sector. So first, I'd like to introduce from Lemonade, Daniel Schreiber, CEO and co-founder.
Thank you.
So having taken the US by storm, Daniel and his team in Lemonade are hoping to radically challenge and disrupt how we think about insurance. And I'd also like to introduce from Direct Line Group, Paul Geddes, Chief Executive. Paul.
Thank you.
So Direct Line was one of the original disruptors 30 years ago, offering insurance direct to consumers rather than going through brokers, but is now one of the largest general insurers in the UK. So I'm going to invite Daniel first and then Paul to the stage to talk about their view of the future in insurance, and then we'll talk. Thank you. Daniel.
Thank you so much. Good afternoon. Thank you. Okay. So let me take a few minutes to tell you a bit about Lemonade. I'll start off by saying that Lemonade is a relatively new company. We launched some 18 months ago in New York. We're domiciled in New York. We've been spreading throughout the US, where every state is its own marketplace, really. We just launched Washington, DC today, and now cover about 50% of the US population. And the reason that we established a new insurance carrier will become clear in the next few minutes, rather than being a broker or an MGA. And that is because we think that a lot of the fundamentals of insurance are ripe for a reinvention, a reconceptualization. So we founded our company based on two pillars: behavioral economics and artificial intelligence. And I'll show you in the next few minutes how both of them interplay in what I hope you'll agree is a pretty powerful new way. But to start with, and to express the challenge that we had in establishing a new kind of company and trying to solve some of the fundamental problems, let's travel back in time some 700 years to Florence, where we see Francesco writing to his wife about insurance, and he says, "It is sweet to them to take the monies, but when disaster comes, it is otherwise. Each man draws his rump back and strives not to pay." Now, I'm not entirely sure what that means, but I don't think it's a compliment to insurance providers. And lest you think that everything has changed since then, we're now in the 21st century, and we're in the UK, and those were the Italians 700 years ago. You go to the Urban Dictionary, which is a crowdsourced definition of all different stuff. And the Urban Dictionary's definition of insurance is a business that involves selling people promises to pay later that are never fulfilled. Channeling Francesco in contemporary language. And for good measure, the Urban Dictionary, as all good dictionaries do, provides a usage of the term. Gomer paid flood insurance premiums for years, but then the insurer decided to go out of business when the flood came because management had spent all the premiums on hookers and private jets. You want the pulse of the people? Go to Urban Dictionary. Now, beyond this making insurance one of the less loved sectors, typically insurance polls lower than the proverbial second-hand car salesman, it has real business implications in terms of customer acquisition, in terms of customer retention, in terms of fraud. 25% of Americans, when surveyed, say that it's fine to defraud insurance companies. I like to quip that the other 75% were brought up not to admit that kind of thing to strangers. But fraud is an endemic problem in this industry, and it's surprising because fraud plagues every industry, certainly every technology industry, but usually you're worried about the hacker from China, from Moscow, from somewhere else, some organized crime ring, but that's not the case. In insurance, the fraudsters are people like us. The vast majority of fraud is not professional fraud. It's people just feeling entitled to embellish their claims, which shows you that there's something emotionally going on, because people like us are law-abiding citizens in other areas of our life. It comes to insurance, we let the devil loose, and then we go back to being law-abiding citizens. And that's why in our founding team member, we have a world-famous behavioral economist, Professor Dan Ariely. You may know his books. And he spent 10 years researching this. He wrote a book called The Honest Truth About Dishonesty, and his conclusion is that if you set out with the express aim of bringing out the worst in humanity, you would create a system that looks a lot like an insurance company. So we tried to do something different, and that's why we had to establish a new insurance carrier. Because the business model of insurance is perceived by consumers to be a conflicted one. You make a claim of £1,000 of me. If I don't pay you that, I'm £1,000 richer, you're £1,000 poorer. We're fighting over the same coin. And that kind of perception creates an unlevel playing field. There's an asymmetry of information that feels that I now am entitled to embellish my claims. We wanted to try and neutralize that. So at Lemonade, we take a flat fee, which is very familiar in Silicon Valley, but an oddity in the insurance space. So you pay us those £1,000. 200 of them are ours, and we will use those to pay for our expenses and hopefully to capture some profit. But if there's money left over at the end of the year, we don't keep it. In fact, we're a B Corp, we're a public benefit corporation, which is a new kind of for-profit business that also cares about things beyond profit. And if there's money left over, what in the trade is called underwriting profit, we'll give it back to charities of our customers' designation, hopefully bringing out both the best in us and the best in them, because when you make a claim, you're not fighting against a nameless, faceless behemoth, but if you're ripping anybody off, it's your local charity. Let me show you quickly how all of that works together with artificial intelligence. I'm going to show you a 90-second sped-up version of our technology in action. Take a quick look. Okay, thank you. Since launching, we've been deeply gratified by the reception that we've received. Consumers have been adopting Lemonade within the US pretty quickly. We're seeing 100% quarter-on-quarter growth now for our 6th quarter in a row, and hopefully that will continue for a while. We are still by insurance measures, a small company, but we're growing pretty fast and are happy with that progress. We're backed by SoftBank and Google and Sequoia and some of the other familiar names as well. And as you'll see, the reception has been really highlighting 3 aspects of our business. People don't like to tweet about insurance generally, and when they do, it's oftentimes expletives that insurers would rather not be posted online. But we see that consumers are happy to tweet about 3 things that are helping us, and really Lemonade is about the cocktail of these 3. One is price. Our consumers tend to skew young, tend to be millennial. 75% of our customers are under the age of 35. 95% of them are first-time insurance buyers. So we're really picking up off the next generation of insurance customers. And for those customers, although not for everyone, we can be radically cheaper. 50, 60, sometimes 70 or 80% cheaper than incumbents, because the overheads involved in running an insurance company when plastered on top of a very small policy become prohibitively expensive, and that's why we can reduce prices dramatically there. So you see people tweeting about saving 60%, 70%, 80%. The second one is, in addition to value, is values. All of us like being with a company with whom we feel a kinship in terms of values, and no one more so than millennials and youngsters who really want socially impactful businesses to be the ones that they give their business to, and being able to designate your give back course and know that a portion of the profits go to it, and that if I behave well, I'll be contributing to those charitable donations is also impactful. And the technology, the delightful experience, really gets a lot of attention, and we're lucky that the bar is set pretty low in insurance. So people come with a low set of expectations. When those get exceeded, they're happy to tweet about that as well. Thank you so much for your attention. We'll meet the other side of Paul's. Oh, sorry.
Thank you very much, and good afternoon, everybody. I took this gig knowing there was an inherent risk, which is I'm one of the incumbents. Sure, you've got some reactions to that. Let me show you a slide which I look at sometimes just to remind myself of the risks of complacency when it comes to incumbency. This is apparently New York, 1910. And the task is spot the car. Can you see it there? Just 3 years later, same street, spot the horse. I mean, these markets can change extraordinarily quickly. And I'm not standing up here telling you that things aren't going to change. I'm standing up here telling you that we think absolutely things are going to change in insurance, and for lots of good reasons. So I would, as you'd expect, assert that some of the things which we're good at as incumbents are of profound value going forwards. But in addition to that, we also need to up our game, especially against some of the new challenges like Lemonade. We're obviously quite experienced at change in the UK market. Comparing notes earlier, the UK market is a bit different to the US market. We've been through a couple of revolutions already. Back in the mid-'80s, Direct Line was the ones that said very challenging proposition to people that bought in the brokers. And they said, look, just one phone call, it's easily done, we'll get you a great price. And that was hugely successful in the world. Direct Line was founded on that proposition. Wind forward a few years later into the digital world, where obviously all of the insurers went online, and then someone came up with a neat idea to enable through one quote process to see the quotes of lots of insurers, and then the price comparison website was born. So that was the next revolution. I believe we're on the edge of another revolution. Two things coming together. Absolutely, as was described, a mobile-first opportunity to make buying and claiming on insurance much easier. But actually, I would argue more excitingly, the change happening to the products that we insure. Cars are becoming smart, homes are becoming smart, cars are becoming connected, small businesses are changing what they do. And I think the most exciting thing is insurers working on the premise that the products that we insure are changing and the opportunity on that. And I'm going to tell you a lot about our views on connected cars coming up in a second. Oh.
Jenny Winston Wolf, you were making chocolate fudge cake when a little accident caused damage to your mobile.
Right.
And to Roger the rabbit, you have Direct Line Home Plus insurance, so your phone can be replaced or you can have cash.
Can you send me a new one?
Sure. Now your daughter Connie comes home at 3:30 in the p.m., correct?
Uh-huh.
That gives us 40 minutes to get the fudge out of Raj.
That was one of our Direct Line adverts, and standing behind that is a belief and understanding that insurance is not a piece of paper. And this is one of the eternal truths that I think we need to take into the future. I had an insurance claim myself last year. I was flooded. I was extremely pleased that someone answered the phone as a person, said, I'm so sorry to hear that. Is everyone okay? We're going to sort it out. You're on cover. And I was extremely pleased that a few hours later, Helps being the CEO of the insurance company, that actually people were there on the ground helping me out put things right. So we are actually in a physical business. We're in a people business. And sitting behind these claims that we make on TV for Direct Line, which is now a brand that's growing, is a huge amount of infrastructure and capability about putting things right when people need us most. We have our own mega garages where we have people repairing the most crumpled of cars back to brand new in 7 days, or we start paying the customer money. We have our own green flag trucks on the roads, plucking people from the roadside in the middle of windstorms and hail and getting them to where they need to be. And we have a fantastic supply chain helping people put their lives back together after a burglary or a flood. And it takes 7 or 8 suppliers to remediate people, for example, after a burglary. Let me show you another Direct Line ad which puts that brings it to life.
Oh, Sammy. So we've had a severe leak. Parents en route, and time is running out. Lucky for you, they called Direct Line. Your plumber's been, so let's put this plan into action. Pineapple shirt, Little Willie will size the place up. Mango, Big Will's on dry up. Kumquat, Agatha's on the heavy stuff. Are we Crystal?
Yeah.
This little shindig never happened.
So hopefully you can see the theme, some real people and physical delivery behind our propositions, which we then dramatize to say to people, insurance isn't just a piece of paper. It really matters who's behind your insurance policy at the moment of truth when it matters most. But of course, that could sound a bit complacent about technology. And as you can see, strewn through these ads, technology is a complete enabler of us able to fulfill these propositions, enabling customers to use their mobiles to report problems. We get them to show us their car when it's been damaged so we can order parts and get on with our 7-day repair proposition. Other instances where we see technology is exciting is obviously AI and machine learning. We are using that right now to spot more fraud. I'm sure we have many of the same algorithms running. And of course, to try and price even more accurately. And we're using machine learning and AI to do that as we speak. Technology is also a platform to enable us to create new propositions and to personalize. If you're a bed and breakfast owner today or a hair and beauty company, Direct Line for Business has a fantastic proposition where we'll ask you questions in English, we'll tell you the insurance covers you need, and then enable you to build a completely bespoke product for those businesses in a matter of minutes with dramatic savings. So we are very much onto the personalization aspect. We also recently invested in a company called Canopy, which is making renting easier through a combined rental passport and deposit insurance. But as I said earlier, the distribution landscape which technology is changing is interesting, but to me most interesting of all is how it's changing the products that we insure, most namely cars. And we are fans of changing car technology. I think it's quite easy for insurers to stand here and say, our business models are built around the way cars used to be, and nothing's going to change. And I absolutely hold the counter view, which I think everything's going to change about the car marketplace. And we as insurers want to be absolutely on the front foot of working with that change. Now, actually, I would argue we're slightly ahead of where consumers are in terms of new technology. 3/4 of people, or 2/3 of people, would actually now prefer to be in full control of their vehicle most of the time rather than trusting technology. But we genuinely see that new car technology is going to make cars safer, it's going to make cars greener, and it's going to liberate people with increasing access to mobility. And on the road to full autonomy, level 4 or 5, there are going to be many prizes. As of today, most of our young car drivers benefit from telematics, and that's exciting for them. It means that we can give them feedback on how they drive, and that actually means they drive better. We've launched a fantastic proposition called Shotgun, which is what young people say when they leap in a car, apparently. Maybe some of you knew that already. And Shotgun gamifies young people's driving in that first 1,000 miles where people have the maximum confidence in their driving and minimum competence. And there's 5 times the level of deaths in that first 1,000 miles. We're gamifying it, we're giving people feedback on how well and badly they're driving, and giving them lots of instant rewards to drive better, with really encouraging early results. We're also upgrading our mega garages to be able to work with aluminium cars and also to be able to install and calibrate sensors. And we are going to be the insurer, we hope, of the first level 4 autonomous car in the UK with the Streetwise project, bringing autonomy to the mean streets of Croydon, which UK people will know are very exciting. We also have a belief that ownership models will change. I think that the fiasco over diesels and people's concerns about actually having the capital risk of electric vehicles will lead people to increasingly want a single figure, no-risk proposition. And that's why we partner so well today with Peugeot Citroën with their Just Add Fuel deals, which with the insurer behind for a single monthly figure, people just add the cost of fuel. And that also uses our telematics data. And the success of that is one thing, but we've just added the Volkswagen Group. Volkswagen, Audi, Seat, and Skoda are working with us now. And we are very excited to work with all of their data and their cars, which are increasingly connected, to come up with new innovative propositions. And Direct Line has a very close relationship and introduced a relationship with Tesla, who are fantastic people to work with. So we do have an excitement about car technology. I think it'd be very easy for us to say that ownership models are not going to change, that data's not going to change. We think everything will change in cars. I have a personal belief in this. My best friend died in an entirely preventable car accident. So I think insurers not wanting to embrace technology which can make cars safer, I think is kind of strange. We have a view that if we can work with innovative companies and change propositions in the car marketplace, the market will probably decline in terms of insurable risk because there will be fewer risks, and that's good for the world. If we can be on the front foot of it versus our competitors, we can grow our share and hopefully then grow our business. I guess in summary, I'd like to say that I think incumbent companies have a lot of resources. They've got brands, they've got data, they've got expertise, they've got supply chain, which I think are going to be beneficial in the future, but also a lot has to change in terms of how we use technology to not only make our products easier to buy and service, but actually, hopefully, use technology to reduce the risks that people run in their everyday lives using the connected vehicles and homes and businesses. So I look forward now to a conversation about that. Thank you.
Thank you both. If I can start, we've got an incumbent and a challenger. One of the big debates we've had in FinTech over the last few years is it the challengers who are going to win versus incumbents, or is collaboration the future? What are your views? Maybe if I start with Daniel.
No doubt you'll see a gamut, the people will run a gamut of solutions, and there's different kind of FinTech. Some of them are, or InsurTech, some of them are there with the express premise of selling tools to incumbents, so there clearly collaboration is part of the business model. That's not been our approach. So our approach is to create something vertically integrated. We write on our own paper. We do work with reinsurers, but we don't work with other incumbents who we view as competition. And I think the US is a different market to here. I think the incumbents, like Paul's company, are very much forward-thinking and technologically enabled. But I think that at a global level, I do expect a changing of the guard. I do. Some of the largest insurance players today have been around for centuries, literally 100, 200, 300 years. And whether we'll be able to make that same statement in 10 to 20 years' time, I don't think so. And I'll tell you in a sentence why. Insurance is fundamentally about data and statistics. That's what it is at its core. When you peel everything else away, that's what's left. And companies that are not digital by design are collecting a fraction of the data sets that companies that are direct and digital. And they're using really 100th or sometimes 1,000th of the data that you can collect when you're in an entirely digital life cycle. And those data sets are predictive. And therefore, it's not that app-enabled technologies are more snazzy and more appeal to consumers, it's that ultimately they'll become better predictors of risk. And for that reason, I do anticipate a changing of the guard.
Paul.
Good. Well, I think you were making your comments about the US market. So I think we are attitudinally in the right place as incumbents. I hate the word incumbents. There must be a better word. Leaders. I love that. Thank you. I think clearly we have some assets, and I think but we also have some liabilities. And I think the assets we have is lots of, and motor insurance, the most profound data, which is we've got hundreds of millions of policy years of experience, and we've got, sadly, millions of accidents, and that's a fantastic data set to learn to predict from. But I think we've got a whole team trying to apply new maths, new statistical techniques to that data to try and crack a different level of understanding using machine learning, of using the data better. So I think we need to be absolutely cognizant of what's good about what we do. As I say, our brands are very valuable, our data is long and therefore valuable. If you have a car accident today, it may take you 7 years to resolve a big major claim. So the data set you have it needs to be big and wide for you to model some of those risks. But I think our biggest danger as an industry is complacency. And I think, every time I see the Lemonade demo, I kind of go back home to my team and say, we need to be as good as that, because thank you. We need to be better. I think if we could be as good as that with our physical infrastructure, with our brands, the scale of our data, but I think that just sets the bar for me for the UI which we need. And I think most insurers, I think the bigger risk, I think, is complacency. So that's it. I think, sorry, I've probably said enough.
So in a way, if I push that further for each of you, what are the biggest challenges that each of you got? I mean, Paul running a large organisation with the complacency challenge and the scale, and Daniel, you've got the agility, but perhaps not the history that Paul's got. What are each of your challenges?
Well, I think when we work with fintechs, people love the fact that we have great access to customers, we have brands, we have the ability to talk to customers, we have expertise, we have supply chain. So those are the things we like. And we envy the fact that you guys start, with a greenfield and you can build stuff from scratch. There's a mindset benefit that comes from that. And so we have to find within our business model how we work with fintechs, how we set up challenger teams, that we try and get the best of both.
And I must say kudos to you and to your company, and in general to the UK. I think the UK is stand out when it comes to these things. I think whether you look east or west, continental Europe or the United States, the landscape is very, very different to what you may be familiar with here. And just picking up on something that Paul said earlier about assets and liabilities, one of the things that I do believe is that for a lot of the more traditional broker-based businesses, not direct and digitally enabled ones, a lot of what they thought were assets are now revealing themselves to be liabilities. So they were very proud that they have 50,000 brokers. Is that truly an asset, or is that actually, in the direct world, a liability? They thought they have a great tech stack that they built in the 70s, but is all that COBOL code an asset or liability? So a lot of things that took them many decades to put together are actually turning out to be liabilities. In terms of our own challenges, we're at a data disadvantage today. We have many disadvantages, but one of them is data. So companies, traditional competitors of ours, have 100 years of history. We don't. And what I tell our team is that we are probably about 18 to 24 months away from the point where I think there's a bit of a tipping point. So our underwriting and pricing today is good enough, but nothing to be proud of. And I think that over time, as that flywheel spins, we get to be much better at that.
And I'm glad in your answer you touched on the international dimension. So we talk about international fintech and the UK being a hub, but we very much talk about international fintech. Now, is insurance a global market, or is it very, very different by country? Maybe if I can start with Paul.
Well, I sold our German and Italian business a few years ago because I have a belief that in our particular case, that the benefits of focus outweigh any potential synergies. And our experience running 3 markets, there was remarkably little in common. Each consumers were very different, the products were very different, the fraudsters looked very different, the law was very different, the competitive set was very different. So we figured out, actually, we should focus and the benefits of focus. And I think generally P&C insurance tends to be currently local heroes. Partly is also we have access to the things which you might compel you to be global, like product development or tech development. We have in Guidewire a fantastic company whose business model it is to build global systems for the world's insurance companies. So my analogy there would be we're buying Airbus or Boeing, which means that and they're operated by local carriers that know what to do with them. And the other thing is capital arbitrage, which is another reason to build an insurance company. Reinsurance can let you access that. So our bet and our findings has been we think it's better to be focused.
We just haven't learned those lessons yet. So ask me again in a few years, but we're moving in the opposite direction. We're hoping that 2 aspects of our business will allow us to have results that differ from the mainstream. So indeed, in property and casualty, there's no American player that operates in mainland Europe and vice versa. The Atlantic seems to be a big barrier. And that's unusual. So many other industries are truly global. There's 2 things that we're hoping will play differently for us. One is the millennial consumer in Berlin, London, Tokyo, or New York, we think, has more in common with each other than with their surrounding environment. They're all using Uber, they're all using Airbnb, they're all listening to Spotify or what have you, and the experiences tend to be global brands, or equivalents. And I think that kind of consumer, they all know what iTunes is, et cetera. I think there's a new generation coming up that is much more global in their orientation, more cosmopolitan. And the second thing is that in being a digital, purely digital player, the costs of experimentation in this regard are much lower. So today, our offices are in Manhattan. Our largest market is in California. And maybe from sitting here in London, America looks like a country. It really isn't. Just follow the news. But what we find is that California, being our largest market, is our nearest employee is 5 flights and 5 hours of flying in 3 time zones over in New York, and we're able to service that. Texas is the second largest market, and we have 0 employees on the ground. The traditional approach to insurance was you come into town, you build a skyscraper, and you populate it with a few thousand people. That's a huge bet to make on a new market. But when you can launch a new state with a 0 footprint, it makes sense to at least experiment with that.
And I guess you can see from our strategy, we've kind of think that insurance is a physical, kinetic thing. Yeah. So I think it's pretty important for us that we do have, we do have the garages, we do have the infrastructure, we do have the people. So that's another reason that sort of experimentation doesn't work for our sort of proposition.
I mean, both of you in your presentations were hugely customer-focused. And maybe if I can touch on that, because customer focus in insurance is hard. We know that most customers do not understand insurance. They don't understand what they're buying. So how are you each thinking about using tech to really explain to customers what they're buying? Are you going to make it easier or actually more complicated as you explain it? Daniel.
It starts, frankly, with the boring stuff, which we are just beginning to take a run at, which is that the policies suck. We use an industry-standard policy. It keeps reinsurers comfortable, regulators comfortable, and it's ugly as sin. I'm a recovering attorney. I can't make heads or tails of the 50-page document that our renter's policy looks like. It's medieval English with exceptions to exceptions to exceptions, and I'm not exaggerating. That's literally what it is. And then when the customer calls up and says, oh, but I'm making this claim, you say, yeah, but didn't you read on page 17, it says, and then you quote some Latin at them, and lo and behold, they're not thrilled with their insurance company. So I think it starts off with rethinking what are you optimizing for at the policy level. Are you optimizing for customers and simplicity, or is it lawyers who have got layer upon layer, tier upon tier of learnings to optimize the policy language? And that's something that we're just beginning to really take a run at. And then beyond that, only if you deal with some of that can you then simplify the user experience. Let me give you an analogy. When we design a product like the one that you saw there, we don't start with insurance. We start with the customer flow. What does it look like to the customer? And then the engineers code it, and then the regulatory team file it. Think about the same thing in terms of policy language. Design a policy not by lawyers, but by people who look at a 3-inch screen and say, how can I make something intelligible fit into here? Now go write a policy to match.
And our analogy there is on small businesses that care a lot about their business, know nothing about insurance, and the traditional model was broker, because brokers can translate questions about your business into questions about your insurance. So we've done a wizard, asking people in English about their specific trade. So if you're a hairdresser, we ask you hairdresser questions. If you're a bed and breakfast, if you're a butcher, butcher questions. And the question flow stems from what you do when we ask logical questions. We then put products into a basket, and then we enable you to build a completely modular product for a business. That's really hard. I mean, cars are really easy. We've got your registration number. We know everything about your car. Businesses are completely non-homogeneous. So we think we've cracked that. We're doing, we'll do funeral directors and butchers, and we'll roll it out. The great thing about tech is actually reaching those bespoke audiences is now completely possible, and we can write policies a lot quicker, a lot cheaper. And to your point, if any of us gave up work and wanted to set up a bed and breakfast company, you do everything online. You go and buy your sheets online and get the creative of your new logo online, probably somewhere in Romania, and you'd do all your marketing online, and you wouldn't go and go to a broker for a product which wasn't just for bed and breakfast owners, but was also for plumbers, right? So we do think tech is a key enabler about people getting simpler products more bespoke, and to save them some money.
And if I compare maybe FinTech in the banking side with insurance, a lot of the driver for change in the banking side has come from regulation, PSD2, open banking. Where's the burning platform in insurance? What's driving you to make change?
Well, for us, it's opportunity. Neither myself nor my co-founder come from this sector. We were looking at what we wanted to do, and we encountered insurance. We found a sector that is vast, touches just about all of humanity, measured in trillions, whatever currency you choose to look at, it's big, is unchanged, was accepting not only present company, but the UK. So incumbency is 100, 200, 300 years old and is using the same models. You're showing your 1910 photos. If a director from some of the large insurance companies were time shifted from then, they'd feel perfectly at home as well. And is unloved. And that trinity of huge, unchanged, and unloved was too much to pass up on.
And I think as incumbents, we've got to fear startups, right? Startups have got a fantastic attitude. They're unencumbered. They're fearless. They have nothing to to cannibalize. So I think we just have to spend time on stages with people trying to eat our lunch, and I think that's probably quite a positive, really, in terms of us making sure we don't rest on our laurels at all.
Now, I'm conscious of time, so I'm going to ask each of you one final question and give you a bit of a platform. So we've each got, you've talked about what your companies are doing, but we've each got a sort of left field, slightly crazy view of how the world might look like in 20 years. What's yours? What might insurance look like in 20 years? I don't know who wants to go first.
Do you want to go first?
Gosh. I mentioned earlier that I think there's a changing of the guard coming. I like to analogize this and kind of pose the question, is this a Wikipedia moment, in the sense that Encyclopedia Britannica started more or less at the same time in the same place as Lloyd's of London, and it survived 2 World Wars and the Spanish flu and the Revolutionary Wars and everything else until it encountered Wikipedia, and then Britannica just fell over and died straight away. And ask the question, does insurance face the same kind of Wikipedia moment? And my answer to that is no. But I do think it's facing an Amazon moment. Amazon has been around now for 20 years, and incumbents like Walmart in the US thought that they'd be able to, oh, we'll see what they're doing, and if it's cool, we'll do the same. And we'll close the gap, and what they're finding actually is that the gap widens rather than closes over time. And that there's a feedback loop to being natively digital that is hard to simulate by just creating your own website. It's something that runs deep, it's in the bone marrow, and it's hard to replicate. And I think that for some of the more traditional incumbents, that's what they will face. So they may still be around in 20 years' time, but I think they will find that they cannot change their DNA fast enough. And that therefore the Amazons of this world, or whatever their equivalent will be in insurance, will be on their ascendancy, and they will find themselves on the wrong side of that history.
Cool.
Well, a few things. I think the first thing to say is we seek to be not only a manufacturer of insurance, but also a retailer. And the first thing we need to do is make sure our retail propositions, like fixing, stays relevant to what people need fixed in the future. And if we can kind of hang on to the consumer proposition with a direct line brand, fixing things in 20 years' time, whatever's worrying people that needs physical fixing. And I think people will always need things fixed, and physical things will always go wrong. We have our Churchill brand, which is all about dependability, and there's a huge need for dependability. So I think there's some eternal ideas that we've got there. But we're also not arrogant enough to think that we will always own all the retail side of it. We want to be a fantastic manufacturer that can work with anybody that's got brands and customer intimacy and data that can plug into our APIs and want to become an insurer. I think lots of people have got great assets which are relevant in the insurance marketplace, and we, as a hedge to us continuing to be a great retailer, we also want to continue to be a great manufacturer and work with whoever can bring some insight, customer intimacy, data to the marketplace. And I think that gives us, hopefully, we'll be here in 20 years.
Brilliant. Well, thank you hugely to Daniel and Paul. And if everyone can show their appreciation the usual way, thank you very much.
Awesome.